Our next guest is highlighting what he calls a major comeback in emerging economies, but he says not many people have noticed and a few foreign investors have taken action. We want to welcome Ruchir Sharma. He's Rockefeller International's chairman, founder, and CIO of Breakout Capital. He's also the author of a new book, What Went Wrong with Capitalism. His new piece for the Financial Times is titled, The World Should Take Notice, the Rest Are Rising Again. In it, he writes many emerging nations are in a much stronger financial position than the United States. As an overstimulated superpower relying on record deficits to power growth, America is on an unsustainable path. Ruchir, welcome. Let's talk about...
Maggie. Thanks for having me.
It's good to see you. Let's talk about first what you see happening with some of these emerging markets. This is like nothing you say you've seen since early 2000.
Exactly. I think that the last 15 years have been a total washout for emerging market investing, save the odd market like India. The returns in most of the emerging markets in dollar terms have been close to zero. And the point I'm making here is that that happened for good reason. In fact, as I wrote about that even a decade ago, that the hype around BRICS was way too much, and the returns that people expected out of emerging markets were way too high. And since then, the growth rates in emerging markets did slow down a lot. In fact, over the last 5 years, the U.S. registered a faster economic growth rate in per capita income terms as well than most other emerging markets. That's quite unprecedented. But what's happening now is that there's a major shift underway. Over the next 5 years, around 88% of all emerging countries in the world are expected to register a faster growth rate than the U.S. in per capita income terms. That's the first time that's likely to happen since the 2000s. And I think that that could be a major driver of capital flows and possibly higher equity returns for emerging markets over the next few years.
You know, I'd argue that some unexpected disasters over the last 15 years have been partially responsible for why emerging markets didn't do so well. The first was a financial crisis. The second was COVID. And in both those instances, you had the emerged markets, the developed markets, that were the ones that were able to spend much more to support their economies in either of those situations. How do you discount the idea that something like that won't happen again?
Yeah, that's always the case. But I think that, that's in the price. So therefore, the emerging markets today are trading at record low valuations against countries such as the United States. So the pessimism on emerging markets today is a lot. And the moment I say something positive, everyone sort of rolls their eyes and says, haven't we heard this story before? And why should these emerging markets do well? They are filled with corruption and stale leaders. And I'd say that, there have been a lot of changes because these countries didn't have the money. They were forced to carry out fundamental economic reform. They didn't have the money to go out and stimulate their economies, and therefore they suffered in the short term. But they've carried out economic reforms. Their current accounts, their fiscal accounts today are in much better shape than 5 years ago, and certainly in much better shape than the United States. So I think it's forward-looking. And it's not always that the developed countries outperform emerging markets. I think it depends what time period you choose. In the 2000s, for example, the emerging markets handsomely outperformed the U.S. So I think that these are cycles, and we are setting ourselves up for a fresh cycle. And a weak dollar, I think, is a very important ingredient in a fresh upturn for emerging markets from here.
Yeah, that's an interesting point, too. Part of this is relativity. And you do make some pretty good points about how the rest of the world views the United States right now. Where's the line you said? America's growing reputation as the world's most irresponsible deficit spender. Explain how you think that's having an impact.
But I think that, there are lots of people concerned about that. We have a presidential campaign going on in the U.S. as well. And as you know, there is no focus at all on the deficit because there is a broad feeling in the United States that as a superpower, they can run whatever deficits it takes. And the U.S. is running, as we well know and discussed on your show before, a deficit of about 6% of GDP. No other country in the world today, at least any other major economy that I know of, is running a budget deficit of that magnitude. And both the candidates only have plans to further expand that deficit when they come to power. So I just feel that there's a lot of apprehension about that. Now, what's kept the U.S. market going as we know, is really the tech sector and so much enthusiasm about AI and tech. If that even begins to fade a bit, I suspect then these other stories around the world will get a lot more attention. So yeah, I think this is predicated on two things happening. One, that the dollar weakening, and two, that some of the hype around the US AI boom and the tech sector coming off. So those are two important things. Any forecast has some preconditions. But broadly, I'd say the probability today is that emerging markets over the next 5 years on average deliver much higher returns than the United States. And this is a very different view that I had a decade ago. So it's not as if I've always, seen emerging markets.
I want to give you credit for that. You did
weekend.
warn back around 2012 that the hype was too much and that you did not see that happening. You were calling actually for the demise of the rest. So you're not somebody who has been a broken record saying the same thing again and again.